All right, futures off a little bit to kick off the week. 30 minutes until the start of trading. I'm Matt Miller.
I'm Danny Berger. Bloomberg open interest starts right now.
Coming up, visa chaos. President Trump moves to curtail H-1B visas. It sends tech companies and their employees scrambling.
A C-suite shakeup. Oracle appoints 2 insiders to be co-CEOs as a TikTok deal nears.
And Pfizer is finally entering the obesity drug race on this M&A Monday. It's scooping up the startup Metsera for about $5 billion.
It's finally there, Matt, and the shares of Metsera are surging on that deal. Let's take a look at it because it is up a whopping 62%. As you said, this is a startup. It's developing a weight loss shot. It would be taken less often. I think it's once monthly instead of the market-leading drugs from Eli Lilly and Novo Nordisk, where you need to take once weekly. So a coup from Pfizer to be able to get it part of this.
Yeah, very interesting story. We're going to continue to follow that, as well as the Oracle story. It's going to provide security for a new version of TikTok's algorithm to keep the social platform in the U.S. But the company also announced the promotion of Magouyrk and Mike Sicilia as co-CEOs, while naming outgoing CEO Safra Catz as vice chair. So a C-suite shakeup at Oracle. The shares in the pre-market down 0.8%. Danny?
Which is nothing for them, considering how much they have gained in recent weeks. Matt, we begin with our top story, though. President Trump slapping a hefty fee on H-1B applications. It's a move that threatens to upend the recruiting model used by outsourcing giants. Investor Kathy Wood weighed in earlier on Bloomberg.
So I think this is a little bit like tariffs, and it's going to capture all the headlines, and it's going to really take the oxygen out of the room, because there's a lot of really good fundamental activity happening in the United States. I just think this is part of the negotiation with India, and that when all is said and done, we're probably going to loosen up the H-1 visa program.
Joining us now is Bloomberg senior editor Mike Shepard. Mike, after this announcement, what kind of confusion was there among the biggest, specifically tech companies, that require the H-1B visa program to really get their lion's share of workers?
Well, Danny, it was really a weekend of chaos. The announcement on Friday, not long after our scoop, that this new $100,000 fee on the H-1B visa would be coming, really rattled them. And there were some reports that Microsoft had even told workers not to travel, to refrain from leaving the country if they had any plans to do so, out of fear that maybe this would complicate their ability to either renew or their permits to stay here and work here, or somehow complicate reapplication. The U.S. later followed up to say, no, this only applies to new visas, but it gives you an indication of what they're up against. And U.S. tech companies, including Microsoft, Meta, Amazon, Google, and Apple, all lean heavily on the H-1B program to bring talent in from abroad. And a lot of it, of course, comes from India. And separately, we are having the U.S. with a very intense trade negotiation lately with India over not only its tariffs, but the heavy tariffs that the U.S. is imposing on products from India, and this is over India's purchases of Russian oil. So there's a lot wrapped up in it, and the tech companies are trying to digest how
Mike, look at this chart.
What is going to happen next.
I mean, I don't think many Americans knew that the vast majority of these visas were going to people out of India, right? 72%. And the other thing that we haven't really been talking about much is that a massive amount of these H-1B visas are gotten through what the federal government calls fraud. You could call it cheating. Bloomberg's Eric Fan and Zach Miter wrote a great story on it last summer. And that half of these visas are going to outsourcing firms. So, yeah, maybe they're getting to Amazon, maybe they're getting to Meta, but they're going through IT staffing firms or outsourcing firms. And presidents and the Congress have been trying to deal with this cheating issue and figure out how to deal with this visa issue since the 90s. Is this maybe President Trump's way of dealing with it?
Well, they are certainly casting abuse as part of the justification for making these changes. And we've reported on these abuses last year, Matt, or this year in March, 470,000 applications for 85,000 slots, and that's a lot. But a number of the applications were submitted multiple times, our reporting has found. You cited the great work by our colleagues, Eric and Zach, and it really does point to how this program has been really fraught with issues. And there is the question of, are they going to all the right people? Are they going to people who maybe can help in other sectors? There's a lot of demand for this. Are they getting the people that they need, for instance, for the next generation of investment in the U.S.? And one thing, and this is something that Kathy Wood just alluded to, the idea that maybe they need to bring in workers for different high-tech jobs. And that would include expanding in the semiconductor manufacturing sector, for instance. Where would they stand in line, Matt, when it comes to trying to get access to those visas? Is India the right source for that? Would they rather get more people and maybe a different distribution geographically, say more from Taiwan and other locations? So this is something that the administration is going to be looking at, and maybe be looking at other means outside the H-1B visa program to keep that talent pipeline full, Matt.
Right. I mean, or if it costs $100,000 more to bring these people in, maybe you train up Americans to do that job is probably the idea, at least, that the Trump administration is pushing right now. Mike Shepard in Washington, we're going to hear a lot more from you about this throughout the day, and surely the story will last longer than that. Switching gears to Big Pharma, though, there's another huge story today. Pfizer is finally getting into the obesity drug game. It's going to pay $5 billion for a startup that makes an obesity pill, catching up a little bit to Eli Lilly and Novo Nordisk. It's massively underperformed those two stocks over the past 5 years. We are joined now by Bloomberg health reporter Madison Muller. And Madison, you've been covering this amazingly for the last year or so as it's been picking up. Did you expect Pfizer to be getting in like this?
Kind of. So Albert Bourla had signaled a couple of months ago that they were eyeing, and Albert Bourla is the CEO of Pfizer, for those that don't know. Pfizer has been eyeing some of the smaller obesity startups in this space to potentially get in and do some type of deal. He had said that they were looking at potentially up to $15 billion, maybe doing a couple of different deals. So this sort of fits into the strategy that they had laid out a couple of months ago. Metsera is one of the newcomers in this obesity race. They have what's called a long-acting amylin drug, which is thought to potentially be a gentler option than drugs like Wegovy and Zepbound, which are known to have high rates of side effects, nausea, stomach discomfort. And so amylin's thought to maybe be a little bit of a better option for some people. However, Metsera is in early stages of development still. So in terms of catching up to Eli Lilly and Novo Nordisk, Pfizer is still probably a couple of years away from actually having a drug on the market.
And maybe we're all taking obesity pills by that point and not even shots. So those shares are higher this morning, but Kenvue, elsewhere in pharma, really getting hit hard. There was that Washington Post report that the Trump administration is planning to link the active ingredient in Tylenol to autism. What exactly would that report look like? What would the impact be on Kenvue?
Yeah, I mean, we're still trying to figure out the details of that. This is something that HHS and the Trump administration has been talking about for a couple months, saying that they are going to know the cause of autism by September. They had since walked back a little bit and maybe extended the timeline, but we are seeing now it's coming. This report's coming in September, and so they've talked about this a lot. We are still not super clear on what the details will be, whether it will also contain information about vaccines, which is something that HHS has been, and the Health Secretary Robert F. Kennedy Jr. has sort of been talking about the link between the debunked link between vaccines and autism for quite some time. So we're not exactly sure if there will be some more information about potential other causes or if it's just going to be focused on Tylenol. But that announcement is expected to come later today around 4 p.m.
All right, we'll see what that brings. Madison, thank you so much. That is Bloomberg's Madison Muller. Now, elsewhere, Oracle is taking over the algorithm for TikTok's U.S. business. Also, roughly about an hour ago, the firm announced a CEO change. Bloomberg Tech co-host Caroline Hyde has been all over the Oracle saga. Caroline, it's such an insane time for Oracle, be it for TikTok, be it for the AI infrastructure build-out. Why now announce a CEO change?
Well, Safra Katz has been there since, 26 years, working hand in hand with Larry Ellison. She's still going to as a vice chair of the overall business. It's interesting that in our Bloomberg reporting, we once showed that Safra Katz herself had actually been a little bit Well, questioning, cautious on the AI focus of Oracle more broadly and the infrastructure, the cloud focus. But these two CEOs, co-CEOs coming to the fore are people who know that and have driven that particularly. Like since 2014, we've seen Clay Magouyrk at the business. He came in from Amazon and he really has been pushing the AI infrastructure side of the equation. He's someone who therefore knows cloud deeply. And this is where the monumental market capitalization increase has gone to Oracle because of their play on serving for cloud, for AI infrastructure, for data center, the compute that is needed for Meta, for Microsoft, for OpenAI and the more. We're also seeing, though, that the co-CEO that's coming on as well, Mike Sicilia, he's someone who knows AI applications deeply. So this is what they're going to be signaling. We are all in. We are all in on this particular part of the growth story. And these co-CEOs have been there for a while, in fact. I mean, since 2014 that Clay has been there. Many feel that actually he's kind of the guy in waiting who's going to take over from Larry, who still, of course, is the chair, but also the CTO of the business as well, being its co-founder.
I have to ask you about the Fox News story. Well, it's not a Fox News story. Fox chairs are moving on the idea that the Murdochs are going to have something to do with TikTok, right? President Trump calling out Lachlan by name, also saying that Rupert will be involved. So how do they fit into this whole TikTok empire? The
assumptions have been, and the reporting in other outlets has been, that Fox, through its parent company, is likely to be one of those involved in the consortium. There have been names that have been linked in that President Trump spoke of in that Sunday interview that haven't been made public in the White House statements, for example. At the moment, we know the consortium is more around Silver Lake, around Oracle, around Andreessen and Horowitz, but there have been some other names that have been thrown in the loop by the president. But we still really need the details of what on earth this looks like. Initially, we were sat here on Friday saying that maybe we'll have a separate new app that we'll all have to migrate to. Well, me and Danny, I know you're not a big TikTok fan, Matt, but it's interesting that now they're saying, no, actually, Oracle would somehow own the algorithm. They'd lease it from them, and then they'd rebuild it from the ground up, and therefore this would be deemed safe. Then you seem to have a lot of US government participation in all of this and your own data. So it's going to be really interesting how they start to signal that this is A, safe, A, going to be as fun and as great an algorithm as it has been under ByteDance, and what on earth this detail of the deal looks like, because we still don't know how much ByteDance is really going to have. We know that about 6 out of 7 of the board helms are going to be US companies.
It's this feeling that we've learned so much, but still know so little about what this is actually going to look like. Caroline, thank you so much. Bloomberg Tech, Caroline Hyde. A quick check on futures this morning. As Matt pointed out, we are moving lower this morning after Friday hitting the 27th record high, lower by about 1/3% for most of those indexes. Matt, it's a pretty quiet week when it comes to data, but there's so many Fed speakers, 5 alone today. I think 18 events in total this week. So if we get something more hawkish, does that push futures even deeper, or stocks even further deeper into the red?
Yeah, I mean, if people start to pay more attention to inflation, Torsten Slok was out this morning saying 72% of the goods in the CPI basket are running above the Fed's target. But I mean, for that to matter, you have to believe that the Fed wants to get to its target, which it doesn't look like they're that bothered
Like Wilson
about.
say, they're going to run it hot. Stocks are about.
They're going to keep running it hot. All right, coming up, Porsche shares drop by the most on record. The company's stock underperforms that of BMW, Mercedes-Benz, Ferrari, obviously, but even Aston Martin. We'll explain why next. This is Bloomberg Open Interest. Let's get now to high interest. Look at what's making headlines around the world. Crypto is getting slammed as more than $1.5 billion in bullish bets are wiped out, sparking the biggest wave of liquidations since March. Bitcoin is falling, and digital asset firms like Strategy are retreating. Meanwhile, old school havens like gold are hitting record highs, and precious metal stocks are rising thanks in part to the Fed's rate cut last week. U.S. Treasury Secretary Scott Bessent pledged to provide all options for stabilization to the Argentine President Javier Milei as the South American country faces a market sell-off. Bessent and President Trump will meet with Milei in New York tomorrow at the UN General Assembly, and they said all options are on the table for stabilizing the currency. And T-Mobile is shaking up the corner office. Its COO, Srini Gopalan, will take over as CEO on November 1st, succeeding Mike Sievert after nearly 6 years. Sievert will move to a vice chair role, just like Soft for Cats, staying on as a strategy advisor. Gopalan is a veteran of Deutsche Telekom and steps in as T-Mobile pushes deeper into fiber and 5G expansion. Sievert and Goplan will join Bloomberg Technology today at 11. Actually, I'm sorry, we've shortened the name. It's just Bloomberg Tech, not technology. Porsche is scaling back on its EV dreams, shelving a future electric SUV and pivoting back to gas and hybrid powertrains. The pivot will cause, a $2.1 billion profit hit, and it sent Porsche shares down the most on record. The share price has fallen so low that it's going to be dropped off of the benchmark DAX index, or it's really, apparently, according to JP Barnard, a free float issue that's very complicated. The luxury icon, though, has now cut guidance for the fourth time this year. And as I said earlier, the shares, since they've been trading in Germany, are even underperforming Aston Martin, which is bad.
I know, and I remember when they debuted, Matt, and everyone was so pumped. Like, we were going to get a separate Porsche listing, and to your point, it's disappointed. With that latest disappointment, let's discuss it with Bloomberg's Craig Trudell, who leads our global autos coverage. Craig, I'm sure there was a lot of thought behind this because they have sunk so much into building out their EV business. Why make this change?
I mean, they sort of had their hand forced here, right? Where they had an initial electric vehicle that they brought to market, the Taycan, that in the early goings actually was doing okay, maybe not quite living up to expectations. But I think they came to the realization more and more that as they were bringing these electric vehicles out, the market was not as firm as they thought it might be. There were real concerns about also software issues within the Volkswagen group that have been an absolute mess and sort of pushed back rollouts. I think all the while you also have just real issues in terms of trade, where this is a brand that is right up there in terms of being affected by tariffs. And not having any U.S. manufacturing presence, and not a sort of clear option to add manufacturing presence because they don't share any platforms with Volkswagen models that are built here in the U.S. So a lot of sort of inputs here that sort of contribute to them saying, you know what, we need to completely rethink our product portfolio. We
were showing video of the 911, which of course still reigns supreme as like the sports car of choice for those who have money, but the Taycan has been, let's show the electric version. The Taycan has been a huge critical success, and people who actually drive it and charge it, it's a very fast charger, here it is, really love it. It seems like the problem is getting consumers over that hurdle, right, to actually take the plunge. And what Scout has done, which is another Volkswagen brand, Danny and I went down and saw the prototype last week in downtown New York, has been to pivot to offering a small range extender. And now 70% of people who've reserved a Scout have chosen that model. Why doesn't Porsche just do this with like the Taycan and whatever electric SUV they were going to make?
I think we are going to see this brand pivot to hybrids. I think within hybrids, I think we would throw EREVs, extended range electric vehicles, into that mix. And there is, I think there's got to be a lot of questions internally and externally about, what were they thinking? Should they have gone in this direction from the beginning? I think there was a sort of expectation that and it wasn't necessarily totally unfounded that people with means were going to be more inclined to go electric, given the fact that it still is going to be more expensive than combustion vehicles for some time. There was sort of a thought that we could get the people who have the means to afford that to make the switch before the rest of the market. But we've seen some real pushback with these performance brands, Porsche being right up there in terms of the consumer of a Porsche, particularly a 911 buyer. We've heard this brand say straight up, we're just not going to make a fully electric 911. It's just not going to happen.
Meanwhile, BYD, which at least was a leader in China and able to fend off some of the competition issues, down like 30% from its peak 4 months ago, and now Warren Buffett is backing off of his entire holdings in it. Is this a sign that the fortunes have really turned for BYD?
I think it's sort of a little bit of a kick while BYD is down, because we have seen over the last few months real concerns about the Chinese government not being tolerant of the aggressive price moves within the Chinese auto market, BYD perhaps being, the biggest and most sort of concerning player from that perspective. So you've already seen this sort of route taking place. You now have a situation where, we've seen this sort of slow motion move by Berkshire Hathaway to move out of that holding. We're now seeing it go to zero. I do think we should dwell, though, on the fact that this was an incredible bet for Berkshire. Even as they're sort of, getting out after a bit of, profit being taken off the table by this, stock move of late, it was a hugely, hugely profitable bet for Berkshire, and sort of yet another feather in Buffett's cap.
Craig, great having you here. How long are you here?
Just today and tomorrow.
All right, well, we're going to have you back on.
We're
going to have you back on tomorrow as well. Craig Trudell is leads our global autos coverage. He's covered, as I always say, cars for us out of Detroit, out of Tokyo, and now out of London, so he has a wealth of experience. By the way, I'm looking at Porsche shares. Since they went public, they're down 42%. And in the same period, Aston Martin is only down 36%. So, I mean, it's pretty shocking because AML stock has traditionally been the biggest dog. And then, of course, you put them up against Ferrari, which is the big winner, gaining 162% in the same time period. That's
massive.
Yeah.
Good for Ferrari.
Ferrari has done very well. And I guess they haven't made this. They weren't early in EVs, right? They haven't got a full EV vehicle yet. So still ahead, we're going to discuss the H-1B visa issue, its $100,000 fee, and the potential impact on earnings, especially across tech, with strategist Seema Shah of Principal Asset Management. This is Bloomberg Open Interest.
Less than 4 minutes ago until the opening bell, a check on futures this morning. We're down by about 0.2% for both the S&P and NASDAQ. Russell 2000 futures down a third. It has been the Russell 2000 that's been leading us higher after a 27th record high for the S&P 500 on Friday. All right, your market open coming up next.
We are moments away from the start of trading on this Monday morning. This is Bloomberg Open Interest. I'm Matt Miller. Let's get a quick check on what futures are doing ahead of the bell. Right now, we're looking at a drop of 0.25% on S&P futures, NASDAQ futures down about 0.2, and Russell futures off 0.25% as well. On the New York Stock Exchange, Mike Waltz is ringing the opening bell. He is our representative to the UN, but he kicked off his career as a U.S. Army Special Forces member. The guy has 4 Bronze Stars and initially started out in politics advising Dick Cheney. And he's had a long run, first Army Special Forces member to be elected to Congress out of Florida's 6th Congressional District. There on the NASDAQ is Prince Albert. Not in a can, but he's here for the UN for Climate Week, I should say. He is, of course, the reigning, I guess, monarch of Monaco, right?
Yeah, which great to be a citizen of Monaco. You pay no taxes, you get subsidized housing. So if Prince Albert wants to adopt me, I'm very happy. You have
a yacht.
Yeah.
There's a great race every year.
Correct. I could get used to that. All right, Matt, some stocks that we're looking at with the market opening. Metsera shares up a whopping 57%. Pfizer's going to be buying the startup that makes obesity weight loss medication for nearly $5 billion. Now, the key for Metsera, it's developing a weight loss shot. It would be taken less often than the market-leading drugs from Eli Lilly and Novo Nordisk. Of course, we were talking to Madison Muller earlier, who said it's going to take some time to develop this. So by that point, are we all going to be taking obesity pills anyway, and shots become irrelevant?
Yeah, I guess. I feel like at some point a lot of people are going to, but let's see how that shakes out. Oracle will provide security for a new version of TikTok's algorithm to keep the social platform in the U.S. We desperately want to keep this Chinese social media platform alive for the kids. The company also announced the promotion of Clay Magouyrk and Mike Sicilia as co-CEOs while naming outgoing CEO Safra Catz as vice chair. And I feel like that's an even bigger move, right?
Yeah.
But everyone's so obsessed with TikTok that's like more important news than anything else.
Not than Oracle spending tons of money on AI infrastructure, because that's been moving the stock, not TikTok. But the kids.
TikTok. So important. So important to make sure you get on TikTok and watch as much of it as possible.
Yes, I know, which is exactly how you spend your evenings, Matt. Anyway, elsewhere, for this equity market, we are lower this morning as the session gets underway, but Morgan Stanley's Mike Wilson sees investors shifting focus away from labor market concerns in 2026. Wilson says that the stock market outlook hinges on the pace of Fed rate cuts, with steep interest rate cuts fueling strong revenue and earnings growth. Let's bring in Principal Asset Management Chief Global Strategist Seema Shah. Seema, there is some irony to this, shifting away from labor market concerns. I'm not sure this equity market ever cared about labor market concerns, trading at all-time highs. What exactly is priced in to this U.S. equity market right now?
Hi, Danny. Yeah, I think that the market today, I mean, at the moment, given how well they're doing, what it's focused on is this idea that, yes, the economy is slowing, but it's not heading towards recession. And that weakness in the labor market is just simply given the Fed a green light to further ease financial conditions and give the equity market a little bit of a boost. So all in all, it's quite positive. But I think Mike is right in saying that we have to keep an eye on inflation. You know, we've seen the tariffs have kind of been delayed a little bit. So in terms of the impact of when it's going to hit prices, everything has been pushed for a few months out. I have to say, we're not anticipating a very significant move up in inflation, you know, up to kind of the low 3% level, and then to be quite temporary. But, you know, realistically, nobody really knows how this is going to pan out. So it's going to be incredibly important for investors and, of course, for the Fed to keep an eye on how that's going.
When you're planning investment strategy, when you're putting together models, Seema, when you're trying to figure out what's going on in this market, do you ever consider the fact that the Fed actually would want to push inflation down to 2%? Or is that just something they say? They're fine with 3%?
It's a good question, because obviously, as we've seen from their economic forecast projections, that it's always 2 years out when they're going to hit 2%. So you have to treat it with a pinch of salt, knowing that maybe that they're aiming to push inflation down towards the 2% level. But because they have all of these, you know, the employment mandate as well, that has to take a bit of their focus. I think it is important, you know, if you were to see inflation expectations picking up next year and inflation rising meaningfully, then I do think that it would slow them down in their path towards getting towards neutral. But certainly at this stage, it doesn't seem pertinent enough to stop the Fed from cutting rates.
Well, the rally that we've gotten with the anticipation of rate cuts, and indeed the first one, it hasn't just benefited U.S. stocks, Seema. Over the past 3 months, it's actually been EM and Russell small cap stocks that have outperformed. It's been so long that if you were trying to bet against anything other than U.S. large cap stocks, you would have gotten smacked. That has changed, but how sustainable is it?
Yeah, and I think this has been a real question for us as well with our research teams of trying to understand, is this small cap rally something which is going to run out of steam very quickly, just as it has in the past, or is it something which can be sustained for a little bit longer? And I'd say that the fundamentals are definitely looking a lot better than I think many would have anticipated. Of course, the interest expense is coming down, but also in terms of profitability, these companies are looking much stronger. So I think this could be sustained, and it's certainly worth, you know, as long as you do believe that the economic outlook isn't very negative, that you can, you know, dip your feet in that. And then from an emerging markets perspective, I think everything is lining up to a continuation of this quite positive trend, where you do have Fed rate cuts, you still have global growth quite positive, and then we also have a perspective of a slightly weaker dollar going forward. So those three things should really continue to spell positive news for emerging markets. And then, of course, remember, China's doing pretty well too, so that's going to be adding to that narrative.
When you look at the H-1B issue and you see that companies who pay, you know, these visa holders on average, I think around $120,000 a year, they're going to have to pay them pay an extra $100,000 to get them in. So raising that cost substantially. Do you foresee any of that coming down to the bottom line when you look at earnings in 26 or 27?
I mean, it certainly could do. I think just like there has been with all of the policy announcements this year, so much is dependent on those details. Is it, you know, as has been indicated so far, that it's really for new applicants rather than existing applicants. I think the hammer is going to really hit hard on some of these smaller tech companies, the ones that really need to continue on in innovation. But I think from a longer term perspective, assuming that the rules are maintained and through the next couple of years, it's a real question on innovation for the US. How far can technology go before you start to see a bit of a catch up? So I don't think this is necessarily a moment for rethinking the trade, but I think that it could, in the longer term, have some impact on the strength of technology in the US if they're not able to grab some of those most skilled workers from other countries.
Hey, Seema, really great to get your thoughts this morning. Thank you so much for joining us. Principal Asset Management's Seema Shah. All right, let's get a check on the equity market right now. About 7 minutes into your trading day, we are moving lower with 388 stocks on the S&P 500 moving to the downside. On the upside this morning, though, Apple leading the pack in terms of point change. Apparently, the CEO of T-Mobile was on CNBC earlier saying that iPhone 17s were flying off the shelf. So maybe that's helping share prices up 2.2%. Tesla, Meta, some of the other Mag 7s that are higher in this session. To the downside, though, Amazon is the biggest drag. We were talking about H-1B visas. Amazon is one of the big users of this among the big tech companies. Nvidia a little bit weaker this morning, as is Microsoft, as is JP Morgan. Again, JP Morgan, another one of these companies that uses that program. When it comes to the individual sectors that are moving this morning, only tech is higher. Again, it is Apple helping things out here. Infotech up 0.2%. Meanwhile, it is financials with that big decline in JP Morgan, followed by consumer staples in healthcare. So kind of interesting. Some of the more safety sectors are down this morning, but overall, we're still weaker by 0.1%, Matt.
All right, so a big skew to the downside for sure. Coming up, Bloomberg Intelligence says the offshore IT model will be upended by the new H-1B visa fee, $100,000. They picked some of the key IT stocks to watch, and we'll show them to you next. This is Bloomberg Open Interest.
Twelve minutes into your trading day, moving lower across all the major indices, down by about 0.2 for the S&P, not by about exactly 0.2%. After hitting a 27th record high on Friday, we pull back ahead of a lot of Fedspeak this week. 5 of the voting members of the FOMC will be giving speeches this week. Let's look at some of the top calls, some of the analyst action that we are focusing in on this morning. First up, Steve Madden gets an upgrade at Piper Sandler. Analysts there say the shoemaker took an outsized hit from tariffs and should start seeing recovery ahead of its peers. Those shares up 3.2%. On the other foot, great pun, I see what you did there, producers. Crocs is getting a downgrade grade from the firm because of weakening demand in the U.S. People don't want to wear Crocs anymore, down 4.25%. Next up, Lennar is getting cut to a sell at Raymond James. The analyst, who is the only Wall Street bear on the stock, says that the home builder is facing multiple headwinds. Last week, Lennar reported disappointing fourth quarter forecast. Finally, Keurig Dr. Pepper, that gets a downgrade at BNP Paribas Exane. The analyst called the company's agreement to merge with JDE Peach, quote, one of the worst received deals we can recall in consumer staples. Those shares down 2%, Matt.
That's harsh.
Very harsh.
One of the worst in consumer staples, and there are a lot of bad deals in consumer staples.
There are a lot of bad deals, so yeah.
All right, let's get back to the H-1B visa story. Bloomberg Intelligence says that the $100,000 application fee could damage the offshore IT services model. And maybe decimate it. BI senior analyst Anurag Rana says to watch companies like Infosys, Cognizant, Tata, as well as others, they'll be forced to redesign their pricing plans. Anurag joins us now. And I mean, what are these companies, Anurag, paying their employees? I think it's around $90,000 or $100,000. This fee like doubles that right off the bat. They just can't do that kind of business here anymore, can they?
No, it's going to be very difficult for them to operate in the current environment. So in the sense that they will not be able to easily move people here. Now, the question is, what are the clients going to do? You know, if you're a large bank, if you are a big retailer, and you really need some project done, do you figure out a way to, get it done yourself? But there's a shortage of IT professionals in the US. So you're going to offshore a lot more work. So I think the filing of H-1Bs from a lot of these large companies will come to a fair, I would say, reduction over the next several years if this 100,000 fee remains.
And Anurag, again, as Matt pointed out, you write how a classic IT or outsourcing model no longer becomes viable, called a pyramid staffing models. What exactly is the model they use that makes H-1B visas so necessary to them?
So think about it this way. We have several kind of different operations in a particular company. Let's say you're looking at tech consulting. In that particular case, you actually need humans to be on site with these executives trying to figure out what their next generation technology infrastructure would be. The second example could be you just have to maintain or see if the office applications are running. You can do that remotely. So it depends on the task. There is a ratio of offshore to onshore. So for every, let's say, one person they bring on board in the US, there may be 4 people somewhere in a low-cost country helping out with that task. So that's the offshore-onshore mix that I'm talking about. Right now, it's going to basically be very difficult to do that. So either you're going to have an offshore model or you're going to have an onshore model.
We had a story, Anurag, I'm sure you saw last summer, about how so many companies, especially these multinational outsourcing companies, were gaming the system. You know, because it was like a lottery system and they were just buying like 50 tickets. Is this going to make the H-1B visa system at least in some ways more fair or easier to understand, even if it makes it more expensive?
I think, you know, the abuse cases will definitely, I mean, I would say could be eradicated in this particular case, definitely. But the big question is going to be what's somebody like a Microsoft or Amazon going to do, because they are hiring those employees to be in the US to do those works. Now, the question is, do they actually develop more R&D centers in near locations such as Latin America, Canada, just for the time zone regions, or they do expand that into their global delivery centers across the board, you know, just in places like India, for example?
Anurag, though, are some of those big tech giants maybe better positioned, obviously still getting hit, but better positioned just because they have the profitability to absorb higher costs and already have large staff bases that, to our understanding, aren't going to face any sort of ex post facto type of higher cost for the H-1B visa?
See, the argument could be, and then, you know, we have heard this argument from the administration also, if the employee is so special, so great, you will pay them an extra $100,000 or spend them, that's not a big deal. Well, I contend that those kinds of visa go in a different category called L1, which is for managers, which is for people with exceptional ability. If you have an H-1B and the average, you know, let's say the compensation is somewhere around 100, 150,000, or maybe even 200,000, you're not just going to go out and raise another 100,000 on top of it. So the economics doesn't work for a large portion of the H-1Bs.
I wonder what you think about Oracle. Obviously, you and Mandeep put on this fantastic AI conference every year, and you have a lot of guests who are from Oracle or working with Oracle. Now they have 2 new CEOs. Was it time for that? And also, in general, as someone who covers companies, Anurag, co-CEOs, is that a good idea?
Well, you know, Oracle has a history of co-CEOs. Safra and Mark Hurd were co-CEOs back then, and, you know, unfortunately, Mark passed away. But Safra has done such a good job of managing this entire transition for Oracle from a legacy company to an AI, you know, infrastructure company. And I'm sure these 2 executives will, you know, accelerate that particular push. In fact, one of them is the head of OCI, or the Oracle Cloud Infrastructure. So I really don't, make much out of this particular one. But, you know, co-CEOs not. But always remember, Larry's still running the show.
Yeah, and, you know, now that Safra Katz is out, we can say it takes 2 men to do the job of 1 woman. Anurag, thank you very much. Anurag Rana of Bloomberg Intelligence. I had to get that one in. Okay.
I think it's important.
Coming up, Pfizer enters the obesity drug race. We have the details of this morning's big deal that's coming up next. This is Bloomberg Open Interest.
This is Bloomberg Open Interest. I'm Matt Miller. Let's get a quick check on what stocks are doing 20 minutes into the session. We're looking at red arrows here, but not big drops. 0.1% on the S&P 500 to 66.56 keeps us still pretty darn close to an all-time high. Same is true on the NASDAQ, which is unchanged here at 24,619. Taking a look at what's going on in stocks, as yields aren't moving much at all, and neither is the dollar. You can see NVIDIA is down about 0.5%. 0.5%. That doesn't help. Apple is gaining about 2% as you get really positive, not only reviews. Mark Gurman seemed to love the iPhone 17, but also customers lining up to grab them. Snapchat is gaining right now on maybe the TikTok reorganization. You can see Meta also up about 0.7% after releasing some new glasses. Pfizer right now up 2.5% after it purchases Metsera for $5 billion to get into the obesity pill market. And Metsera, you can see soaring a 61% gain. Danny.
Matt, let's get more on that story on the Pfizer-Metsera deal. We're joined now by Bloomberg Intelligence Director of Research, Sam Fazeli. Sam, how crucial was it that Pfizer got some sort of a foothold in the obesity market with this most recent deal?
Yeah, hi. So this is a deal that I think a lot of people were expecting from Pfizer, given that their own efforts in obesity hit a brick wall with some of the data they were getting. Their products weren't competitive. Crucial, well, look, Pfizer needs drugs to help plug a hole that generics are going to create for it. So they've got drugs like Vyndaqel, drugs like Eliquis that are going off patent. That's a certainty. Here, what they're doing is going into a space where everybody believes is so large that even if you have, well, whatever you want to call them, Me Too assets, you still should be able to get some revenue and therefore help you there. Now, the assets from Metsera we like, but they're early stage, and there's a lot of work and wood to be chopped here. And hopefully in the next 2 or 3 years, well, actually quite soon, we know some phase 2B data coming. But what you hope for Pfizer is that the world doesn't change again over the next 2 or 3 years. You know, I've been calling this like a game of snake and ladders. You seem to be doing really well, and then you have a bit of data that shows, oh my God, there's too high a vomiting rate or a nausea rate with the drug when they go into later stage trials. So there's a lot to be proven, but it's a step in the right direction.
By the way, Sam, what's the addressable market? I mean, the United States obviously has the heaviest people in the world, right? We need this. Mm-hmm. And in terms of people taking these pills, what's the success rate or the shots?
Yeah, well, so this has only been through a phase 2 trial, and we got some later stage phase 2 data coming. So, you know, based on a 12-week trial, the efficacy seemed on par with what we're seeing with the incumbent drugs from definitely the better one of the two from Lilly in terms of efficacy. Now, this was a small trial. We need to see how it performs. It's tolerability that's super important here. There's no point helping people lose I don't know, about 15, 20 kilos if you're spending half your day dealing with nausea and vomiting, right? So it's that we need to see. They looked okay, but we need to see better data coming out. I've got some clients who are calling it the vomit drug as opposed to an obesity drug. So let's wait and see what that data comes out. And in terms of addressable market, I think my colleague Michael Shah has just updated his numbers. He's in the region of $100 billion. I mean, honestly, as you rightly said, it's such a big potential. It's all a matter of whether governments and healthcare systems are prepared to pay for it and how long people stay on the drugs. So lots of algebra here to figure out.
Yeah, God, the vomit drug, that's not a name you want.
That's not very nice, no.
Hey, Sam, less than a minute here, but you talked about the world looking different in 2 years. What is at risk for Pfizer of what the world may look like in 2 years?
The risk is that some of the newer combinations come out with efficacy that's better or side effect profile that's better or the combination thereof, and or you end up in a place where your quality of weight loss is better. You lose weight, but you don't lose it from muscle. Those are all the areas that people are fighting over. And of course, once a month injection, once every quarter injection, once every 6 months injection. We'd all prefer that sort of thing. So there's a lot to play here.
All right, Sam, thanks very much. Sam Fazeli there of Bloomberg Intelligence talking about the race to give us the best fat pill. Coming up in the next hour, Threadneedles and Barry on the new social media hierarchy with the TikTok deal. Plus, we'll talk consumer sentiment and holiday spending expectations with Mastercard's Michelle Meyer. This is Bloomberg Open Interest. We are 30 minutes into the trading day. Welcome to Bloomberg Open Interest. I'm Matt Miller.
And I'm Danny Berger. Some of the worst of the losses that we saw right at the market open starting to ease, so we are still trading around record highs this morning.
Yeah, coming up, Visa chaos. President Trump's move to curtail H-1B visa sends tech companies and their employees scrambling.
Investors awaiting new economic data and Fedspeak this week. Fed Chair Jay Powell will be speaking tomorrow ahead of PCE data out on Friday.
And an old-fashioned binder is Citadel Securities' secret playbook for trading hundreds of billions of dollars. We're going to give you more on that exclusive report on Ken Griffin's 50-pound book.
His bound book, very large book.
Bound in a binder.
Bound in a binder, that is correct. Back to the markets, and Morgan Stanley's Mike Wilson sees investors shifting focus away from the labor market and towards inflation in 2026. We got the view from Principal Asset Management earlier on what this equity market is trading on.
I think Mike is right in saying that we have to keep an eye on inflation. You know, we've seen the tariffs have kind of been delayed a little bit. So in terms of the impact of when it's going to hit prices, everything has been pushed a few months out. I have to say, we're not anticipating a very significant move up in inflation, you know, up to kind of the low 3% level, and then to be quite temporary. But, you know, realistically, nobody really knows how this is going to pan out.
Joining us now is Threadneedle Ventures founder Ann Berry. And Ann, obviously, the rate story is so important to the market and the economy. But do you really think that the Fed wants to get down to 2% inflation? I feel like they're okay with 3%, right, since they're 50% away from their target.
Do I think that this Fed wants to get down to 2% inflation under the chairmanship of Jay Powell? Yes, I do. Do I think that changes when his term is up? Yes, I do. So I think, look, I think we're not quite in a lame duck period, but almost. And I don't see inflation coming down to the 2% level until his term's over.
Does that mean when you look at who's speaking this week, we had Fed Chair Powell, and you almost discount that and you pay more attention to Waller, to Bowman, to the others who speak?
Unfortunately, I think we start to, I say unfortunately because I am a proponent of actually sticking to that 2% target and maintaining the credibility of it. But I do think we're now, as we exit this year, moving into having to listen more closely to other voices, watching that dot plot and the dispersion, which was actually significant when you take a look at it from the most recent Fed meeting. So I think we are starting to have to pay attention to other voices with more intensity. Yeah.
All right, so this is, you know, the rate story is one that affects the costs that these companies pay financing. Another story that affects the cost is the H-1B visa story, and it's grabbing the headlines. I think it's incredibly fascinating. Some of us are learning things we didn't know before, that 72% of H-1B visa applicants are coming from India, or winners are coming from India. How do you think this plays through into the big companies that need all of these workers, into the small companies that maybe won't be able to afford them now?
Well, let's start with the big companies. And I was waiting to come on. I saw this helpful chart that you flashed up, which showed, I think it was Amazon, Tata, some of the financials are the biggest participants in the H-1B program.
I believe we have that chart.
There you go. I'm calling up the chart for you. I think those companies, not only can they afford it, right, in terms of the number of H-1B visa holders they have, and if they were to sort of cycle through to replace, this fee can be absorbed by those companies. But here's one thing I would just say. The average, I believe, someone should check this, tenure of an H-1B visa holder on that program is 6 years. So I would think about that $100,000 fee as amortized over 6 years. So we're calling it just under 17 grand a year in effective annual uptick. Now, I think there's a lot of data that shows that a lot of H-1B visa holders are actually paid less than their, U.S. citizen counterpart would be. So does this actually just sort of net out to what would have been the alternative to these companies anyway? That's for the bigger players. I don't think it changes much for them. I think it's just a revenue generator for the U.S. government. For the smaller businesses, I think this does impact them. And so I think we do need to watch out in pharmaceuticals, for example. It's not just tech, right? In biotechnology, what happens there? And often those smaller companies don't have as much cash, right? Or they're burning through money on things like R&D. So I think we're going to see a very different impact depending on which part of the economy we live in.
By the way, I just checked, and you're correct. It is a 6-year tenure.
It is 6 years, okay.
Yeah, because then workers either go home or they're far along enough in their green card process that they get it.
And then there's 3-year extension increments afterwards. So again, it could even be more than 6 years.
But it is part of just a wider trend of trying to crack down on immigration, be it what's happening at the southern border or what happened at one of the Hyundai plants with South Korean workers, with all those images of people getting put in chains. does it ultimately curtail U.S. growth? If international companies who have been making commitments to come and grow in the U.S. all of a sudden are not sure if they can bring or get the workers that they need?
Let's focus on tech just for a minute to try and answer that, Danny, because when I think about the H-1B visa population, for some of those big companies we talked about, the visa program is being used to fulfill roles that typically requires a good amount of education, a pretty high skill set. So I have a slightly different perspective on this versus, for example, the border control. Is this a way of trying to force greater investment in education to fill those seats here in the US? Is this a way, in conjunction with what's been going on with student visas, right, to try and force Americans to have more spots available to them at schools? I don't have a personal political opinion on this, but I would delineate between the H-1B visa situation and other immigration acts that we've seen lately.
I want to ask about TikTok because you're so good at social media, analyzing the companies as well as being on it. I love your YouTube show.
I'm going to come do Reels now. Thank you for calling out the YouTube show.
What's your take on this new consortium that we're hearing about? We don't know much detail, but it seems to be one of President Trump's top priorities, getting TikTok, keeping TikTok in the U.S.
Okay, I have a newly emerging thesis on this. I'm going to write about it, but this literally came to me over the weekend, so I was excited I was coming on today. I think seeing what happened announced, I think it was Saturday, that Lachlan Murdoch is a name that's been thrown into the ring as being part of the TikTok resolution.
The president himself said Lachlan.
The president himself. And you know, the follow-up reporting on this wasn't, it wouldn't be a Lachlan Murdoch personal investment, it would actually be done through Fox Corporation, right? That is now news media and TikTok coming together. Larry Ellison, we can't really separate him, right, from Paramount CBS. That is news media now touching TikTok. So the thesis I have emerging is, what happens to Reddit? What happens to Snap? So I sort of went into the numbers. Snap's market cap's about $15 billion today. I'm making this up. Suppose Bessent, you know, when that is complete, that spin out, maybe they want to have a platform where they can now start dropping news clips to a younger demographic. Is Snap, a feasible size for a merger? It's not impossible. Reddit, $50 billion-ish market cap. You know, the Ellison family could wake up tomorrow and think about pulling that into the Paramount Skydance family. So this is an emerging thesis, but I now do wonder whether social media assets start coming into play as a new news distribution channel. We've got to start looking for M&A activity.
But what happens when it's the Metas of the world that control the big U.S. social media companies? Can a Snap being acquired by, let's say, Warner Brothers Discovery, choose whatever name you want, actually compete? Does it change the profitability and the outlook of some of the smaller social media companies?
Well, I think it changes their cash flow, the cash that's behind them. I think it changes their war chest, right? If you have the Ellisons behind you, I think you suddenly have a very different war chest versus if you're Snap desperately trying to figure out your attention and profitability model. And if you look anyway at what's going on, Reddit is signing licensing deals with the AI players, right? They're doing that to generate incremental, extremely high margin cash flow. Why not just go all in and join one of these players anyway? And actually, it may not be their decision. It may end up being a shareholder vote if someone wanted to get really aggressive and lob in a bid. So again, this hasn't sort of become concrete yet, but I'm starting to look at whether we need to start thinking about social media assets as a totally different M&A pool.
That is so interesting, and we're going to have to leave it there. You need to come back again soon. We need to talk about this more. Threadneedle Ventures founder Ann Barry, thank you so much. And Matt, speaking of TikTok, some lines just crossing. A U.S. official saying that Trump will be signing a TikTok order later this week. He will also be extending the TikTok deadline by an additional 20 days. And there'll be a brief to reporters on the deal, so maybe we'll finally actually understand what this beast will look like.
Right, but one thing that's clear is that the U.S. administration will do whatever it takes to keep TikTok in the hands of our youth, Danny.
Yeah, I mean, they are hawkish on kind of everything else, China, except TikTok. TikTok, they're happy to do whatever it will take. They also, a U.S. official also saying that a copy of the algorithm will be brought to the U.S. group. It's our understanding that Oracle will oversee that U.S. algorithm. All right, let's get a quick check on markets, Matt, because they did start deeply in the red at the start of opening. They have now paired those losses, and even for the NASDAQ, just barely into the green. If they can do so, they will hit another record, but just not a lot of movement. There's not a lot going on this week. We have PCE on Friday. Maybe it's the Fedspeak that's more interesting. And Barry was just telling us that some of the other speakers beyond Jay Powell might be the more interesting, but 6,662 is where the S&P 500 trades this morning, Matt.
All right, we're not seeing a lot of move in terms of yields, still stuck at around 412, 413, which is what we saw at the end of last week. Let's get a look at some of the single stocks moving this hour. Shares of Fox are rising on optimism over the company's role in a possible TikTok deal that Ann Berry was just talking about. President Trump suggested that Lachlan Murdoch, the chairman of Fox, and his dad Rupert are involved in the latest deal that is being explained, I guess, to White House reporters right now.
Yep, it's going to have an algorithm that gets reinstated in the U.S. And again, to your point, there will be a briefing about that. We're also watching Pfizer shares this morning. The company agreed to buy an obesity startup, Metsera. That deal, $5 billion. It's part of Pfizer's efforts to catch up after stopping the development of its own weight loss pill for safety reasons. Sam Vizzelli, I really like this, calling it a game of snakes and ladders, which I think is the British version of Chutes and Ladders, where you go up.
Snakes and ladders?
Yeah, I think that's what he said. I'm assuming that's the British version of Chutes and Ladders.
Interesting.
But yeah, where you go up the ladder.
I wonder if Hasbro owes that to. I know the game, right?
You know, yes, you know the game.
Chutes and Ladders.
Chutes and Ladders.
I have a 5-year-old at home. Shares of Tylenol. The maker of Tylenol, I should say, Kenvue, are falling after the Washington Post reported that the Trump administration officials are planning to link acetaminophen, which is, of course, what Tylenol is, to autism. And obviously, that's no good if you're doing business as Tylenol. And as a result, the shares are down only 6%.
Yeah, I think we're expecting a press conference around 4 p.m. to understand the details of that. So a lot of agenda coming up for the White House today.
Coming up, President Trump is fueling anxiety a little bit, at least, in the global workforce because of this $100,000 fee on H-1B visas. We saw a plane, for example, full of people freaking out. Some of them got off and didn't come here. We'll look at that sudden change next. This is Bloomberg Open Interest.
President Trump is slapping an $100,000 fee on H-1B applications. It's a move that threatens to upend the recruiting model used by outsourcing giants. Investor Kathy Wood weighed in earlier on Bloomberg TV.
So I think this is a little bit like tariffs, and it's going to capture all the headlines, and it's going to really take the oxygen out of the room because there's a lot of really good fundamental activity happening in the United States. I just think this is part of the negotiation with India, and that when all is said and done, we're probably going to loosen up the H-1 visa program.
Joining us now is Bloomberg Tech co-host Ed Ludlow out of San Francisco. So is this the way it's being seen, Ed, as a negotiation tactic with India? Because it seems to play along with all of the Trump themes, right? He wants to give Native Americans more jobs and, give them better paying jobs. And it also sort of does away with the gaming the system that we saw in a Bloomberg study of this program at more than 18%, like 20% of the people who are getting these visas were cheating.
So the data is critical, and when it relates to India, more than 70% of all of the H-1B visas that are awarded go to an Indian citizen or individual anyway. The reaction over the weekend wasn't one where, for the companies and the employees in question at least, this was a negotiating tactic between those two nations. The immediate reaction was confusion because what the White House and the president did not discuss on Friday is the implementation of the new set of rules. Literally, does this apply to the body of people that already have an H-1B visa or not? And that prompted Press Secretary Caroline Leavitt to clarify on Saturday it's only for new applicants for the next tranche. So every year, applications open in March for the following calendar year. And there is a cap of 85,000, 60,000 general application, 25,000 specifically for people with master's degrees and above, and everything thereafter is a lottery system. And that was the confusion, and you're showing the employees there. What happens next vis-a-vis India, certainly interesting, though.
Who is impacted, though, Ed? Because you look at Amazon, one of the heaviest users, 10,000 H-1B visa applicants, but this is an extremely profitable company. If they want to hire more H-1B visa holders, can't they? And isn't it the smaller ones that lose out?
We were just talking about this in the Bloomberg Tech show call. Like, the stock's down 0.8%. Do we draw a direct causal link between what's going on with H1Bs and Amazon shares performance? It's not clear. You know, there's been a lot of commentary over the last few days from technology company followers and some of the banks themselves. You know, financial institutions, particularly in America, also have an H1B visa workforce. $100,000 per applicant is potentially manageable. Here in Silicon Valley, though, you know, where the concern is being felt most is like, what if you are a small startup of 10 to 15 people and you're baking in $100,000 per applicant on an H-1B visa? At the margin, that would represent like something a bit more significant. I don't know if you guys saw the HSBC headline, and the headline on the terminal is like, we're sanguine about it, it's manageable. HSBC only has like 54 H-1B holders. You know, JP Morgan has thousands. So I really think it depends how many applications each company is intending to make.
Right. Well, and as we see from this graphic, 22,000 IT staffing companies got H-1B visas out of 85,000 in 23. You know, 11,600 outsourcing companies got them out of 85,000. So a lot of these companies maybe don't have them directly, but they're using an outsourcing company to get them. I think the interesting question, Ed, and I don't know if the answer is clear, but are companies hiring somebody out of India because that person will do the job for 100 grand when an American is going to need 150? Like, what's the delta there? Or is the problem we just don't have enough Americans who can do this job at all, which is why we need so many people from India?
In specific computer science and engineering roles, also in industrial use cases like tooling, there is a deficit of skill set in this country, right? And we talked about that. Also, a lot of companies will tie visa costs contractually to comp. So they'll say, if we get this visa done and it costs $100,000, you have to stay for a minimum period of, say, 2 years, or you owe us that fee back, is a mechanism to try and get people to stay. But actually, to your point, the opposite is being discussed, which is like, there's a very close affinity between H-1B visa applicants and the technology industry, and also academic institutions for research, right? Particularly the California Bay Area universities. If you are India or you're China, you'd kind of be cheering it and saying, oh, this might actually help us keep talent that has historically been so inclined to move their intellectual capital to the United States.
All right, Ed, fascinating topic. I'm sure we're going to hear a lot about it from you next on Bloomberg Tech. That's the show he co-hosts with Caroline Hyde. They're going to talk, obviously, a lot about TikTok, as well as the Murdoch's role and Oracle and its new CEOs. Let's get now to high interest to look at what's making headlines around the world. President Trump will join world leaders for the United Nations annual gathering as the organization's loudest critic and its biggest debtor. The U.S. has all but stopped paying its bills to the UN since Trump took office in January. Washington owes more than $3 billion in dues and peacekeeping costs. The U.S. could lose its vote in the UN General Assembly if it continues to refuse to pay. U.S. Treasury Secretary Scott Bessent says Washington is ready to back Argentina as its markets tumble. He and President Trump will meet with President Javier Milei in New York tomorrow to discuss options ranging from currency swaps to dollar debt. The pledge sent Argentina's bonds surging, offering Milei a potential lifeline ahead of October's midterm elections. He's spending pretty much all of that country's reserves to prop up the peso. No dice for Manhattan. A state committee has rejected the latest remaining casino proposal for the borough, an $11.2 billion project near the UN. That leaves Queens, Yonkers, and Coney Island still in the running as New York pushes ahead with plans to award 3 downstate casino licenses later this year. So wait, if you want to go to a casino in New York City,
you just have to cross a bridge.
You have to go to Queens now instead of doing it here on the island.
Yeah, I mean, that's not too hard. I'm just happy this is over because my inbox was literally stuffed with mailers about this, being like, vote for this, it's a good thing.
So you no longer have to think about it.
I no longer have to think about it.
Until you become addicted to gambling, and then you're going to have to go to Queens all the time.
I'm always an inch away from that, Matt. That is correct. Elsewhere, Oura, the maker of the fitness tracking ring, is closing in on an $11 billion valuation. The Finnish startup is raising nearly $900 million, doubling its valuation from just a year ago. Growth growth being fueled by female shoppers, global rollouts, and purchases made with health savings account funds. Tom Hale, the CEO of Aura, will join Bloomberg Tech today at 11:30 a.m. New York time. And if you're a holder of the Amex card, you also get money to spend on Aura, so I guess that's good for them too.
Yeah, the platinum card.
Yeah,
not just
correct.
any Amex.
Sorry, great distinction. The nearly $1,000 a year platinum card. Yes.
I can't see myself wearing a big Aura ring.
Me neither.
But I do wear this Whoop band, and I notice that even if I feel fantastic, if it tells me I've had a bad recovery,
you're like, oh, things are bad.
It ruins my day.
Yes, I am there with you.
Still ahead, more on President Trump's H-1B visa fee. We're going to talk about the anxiety that it sparked in corporate America and on maybe a plane near you. Amova Asset Management CEO Stefanie Drews weighs in. This is Bloomberg Open Interest. Let's get a quick check on the markets using the Move screen. It's the most dynamic way, I think, to look at the S&P. You can see, for example, that we've only got 150 stocks rising, 350 down, but it's trending higher. So we just turned positive on the index. NVIDIA still weighing us down a little bit. Microsoft, Amazon, and Broadcom all off, as well as Palantir. But on the plus side, Apple is gaining, Tesla is gaining, and Oracle is higher as it names two new CEOs. So you can see that there are some big gainers weighing on us, and we have very bad breath. Nonetheless, we're rising back up to what could be an all-time high. The S&P right now trading at 6,663, and I believe we need to get to 6,670.
Yeah, sounds about right.
Somewhere around there. Surely it'll happen. Coming up, Stefanie Drews, CEO of Amova Asset Management, weighs in on that question. Will we hit an all-new high? High, because obviously at some point it will.
Yeah. Matt was talking about a new high. Here we are almost just about 6,666 at the nadir of the financial crisis. This equity market was trading at 666, so we are 10 times that value this morning. The Nasdaq outperforms up 0.1%. Here to give her perspective on the markets is Stefanie Drews, CEO of Amova Asset Management. Stefanie, thank you so much for joining.
Thank you for having me.
So even though the S&P 500 is at all-time records, other things have outperformed it over the past month, notably small caps and notably EM. Does that trend continue where even though U.S. is doing well, that maybe riskier things abroad may be the outperformers?
Or riskier things, or non-riskier things abroad. In fact, if you look at the markets right now, you can see Japan up 17%, Germany, the DAX, up 25%, Hong Kong up 35%. And so you're seeing a lot of Asian countries and European countries, Euro stocks up 14%. In line with the US or maybe even above. The reason for that is the valuation is cheaper, and there are other structural reasons for that as well. So we're seeing new flows shift away from the US into other markets to create a more balanced portfolio. And we're definitely seeing a de-dollarization of portfolios where we're seeing the dollar being hedged more. So people are still holding on to US assets. They're not selling them off, but they're protecting the currency exposure, and then they're moving fresh assets elsewhere. And there are some awesome growth stories in ASEAN, in Japan, and in Europe, and even in China.
So a real shift in the mix of what
Correct.
International investors hold. In some respects, away from a U.S.-focused portfolio maybe, or a U.S.-dominated portfolio, to a more diverse portfolio. At the same time, you are moving your business or growing your business here in the U.S. making a name change and really, I guess, dedicating yourselves to the American market. So it still has obviously a lot to offer, right?
It absolutely does. And so the asset allocation shift is more to create a more balanced portfolios. People have generally been overweight the US, and there is a natural limit to how overweight you want to be, including, by the way, central banks. They've also been overweight the US dollar. So a lot of these things are happening just for rebalancing. In terms of us, yes, we did change our name to Amova Asset Management. We used to be Nikko Asset Management. We're part of the Sumitomo Mitsui Trust Group, one of the largest trust banks in the world. And we are expanding our footprint in the US. We've actually been here since 1984. But this is one of the most interesting markets from the asset management perspective. And so we definitely want to tap in. And so we have a very ambitious global growth plan that looks at expanding our footprint here in the US inorganically. So we have been looking for appropriate acquisition targets.
Well, to your point, people are still buying U.S. equities, but foreigners are hedging it with dollar exposure. Given that you have such a great view into global investor bases, how different are foreigners' views on U.S. equities versus Americans themselves? Is one segment more bullish or less bullish than the other?
I think that definitely foreign investors want to have exposure to the US. There is no doubt about that. But I think valuation is beginning to play such a huge story. And if you look at the valuations, for example, Japan, where there's huge growth potential, and Europe versus the US, the gap is just huge. Even if you kind of look at it over 20 years, the PE multiple, right now in the US, we're at 27 PE multiple over 20 years versus Europe and Japan, where you were at 16 and 17. But the growth expectations are quite significant. And then when you pair that with a depreciating currency, this diversification is quite natural.
In terms of the opportunities that you see elsewhere, and you seem pretty enthusiastic about those growth stories.
Yes.
What are the most exciting to you?
So I think maybe in Asia, and not just because we're headquartered in Japan, but Japan. Japan is a huge story, and it's one that really is strategic and long-term. So we've seen Japan really change the way that it looks at capital efficiencies. It's reviewed its corporate and stewardship codes. The Tokyo Stock Exchange modernized. And I mean, I sit in the meetings at the parent company, and I've never heard more discussion about capital efficiency ever now than before. And that is a long-term trend. So we're seeing companies really change their efficiency model. So Japan, hugely interesting. But ASEAN as well. ASEAN has captured a lot of the supply chains that have already shifted under the first Trump administration and during COVID. In fact, there's more ASEAN-US import contingent now than China. And more foreign direct investment goes into ASEAN, which are the Southeast Asian nations, than China. So there's been huge changes, and there are very structural reasons, including the biggest consumer growth story. 700 million people, 400 million will be basically middle class by 2030. So the consumer story is enormous, as well as an industrialization transformation, EV ecosystem, as well as moving up the value chain for semiconductors. And so very, very strong reason for ASEAN. And then Europe, of course. But Europe is a valuation play. And as I said, with the Central Defense Fund, there's going to be a release of European debt that will be issued. And so Europe also very, very interesting story, and a market that is very, very highly regulated. So the impact of deregulation, as suggested by the Draghi report, will be much bigger than in a highly deregulated market where the impact will be far less.
All right, Stefanie, great to have you in here. Thanks so much for joining us. Hope we can get you back soon. Stefanie Drews there of Amova Asset Management. Let's get a look at what the stocks are doing, some of the single stock stories, because they were big ones this morning, and how the shares are moving. Oracle announced leadership changes, promoting two executives, Clay Magouyrk and Mike Sicilia, to the role of co-CEO. Safra Catz, who has led the company for over a decade, and as Anurag was telling us, been there for 26 years, will become the executive vice chair of the board.
Oracle has almost doubled this year. I mean, that is so insane to me. And amid all of that, they're putting in new CEOs that the market is excited about. Usually shares fall when you get a new CEO.
And it was off this morning in the pre-market, down about 1%. Now it's up 2%.
Well, we also had another CEO change, and that came from T-Mobile. They also announced changes in the C-suite. They are set to promote its chief operating officer, Srini Gopalan, as its new CEO. The move will be effective in November. And both of the executives from T-Mobile will be joining Bloomberg Tech today at 11 a.m. Those shares not as positive as Oracle are, but still up this morning.
Gold mining stocks are rising after gold hit a fresh record high following the Fed's rate cut last week. The move builds on a run of 5 consecutive weekly gains for the precious metal. You can see Newmont Mining, Barrick, and Agnico all up after gold topped $3,700 a troy ounce.
Now, coming up on the show, we're going to take a look at the health of the U.S. consumer with Michelle Meyer of the Mastercard Economics Institute. That's coming up on Bloomberg TV.
Investors are awaiting fresh economic data and Fedspeak this week, with Fed Chair Jay Powell set to speak tomorrow ahead of PCE data, the inflation data that we get on Friday. That's the inflation measure that the Fed actually cares about, supposedly. Joining us now is Michael McKee, Bloomberg's international economics and policy correspondent. By the way, I say that a little bit sarcastically or cynically because they have this 2% goal that they're clearly not trying to get even close to. Like, if they were 10% away or 15%, I could get it, but they're 50% plus away from that. So why pretend that that's a goal?
I asked, you obviously set me up. I asked Jay Powell this at the news conference last week, and basically he said, by telling people that's our goal, we tell them that's our monetary policy, and they have an idea of what the path is going forward, even if we aren't able to get there yet. But they do want to get to 2%. Why they can't is a matter of debate, and it will be debated this week. I see Michelle Meyer over there doing push-ups, getting ready for all the Fed speak this week. We have something like 14 different Fed officials who are speaking this week, including Alberto Musalem of the St. Louis Fed. He's the first one on the board this week, saying that he thinks the neutral rate is higher, and that means we need to cut less, if at all. But he does worry a little bit about the labor market, which is why he supported the 25 basis point reduction last week. Doesn't mean he'll do it in the future, he said. But you look at all the people who are speaking this week, and it's almost everybody who is a voter, at least, on the Open Market Committee, and they're going to get their markers on the wall. The two that people are following is Stephen Myron, who is obviously an outlier in the Fed's outlook for what's going to happen with the economy. He's speaking today at noon to the Economic Club of New York. We'll have that for you on Bloomberg Television and radio. And of course, we're going to have Jay Powell tomorrow, as Matt mentioned, and that's the one that's going to really get people's attention, because even though Stephen Myron's making a case for a big move, Jay Powell is not. And he is shown through the consensus he got, no dissents other than Myron's last week, that at least he is still relevant to the discussions as he remains chair for another couple of months.
To be clear, the only person who's working out in anticipation of Fedspeak is Waller, and those insane powerlifting squat things he does. Have you seen that? He posts on social media all the time.
I have not seen it.
He's a power lifter.
Yeah, he can do like 300 pounds.
It's frankly terrifying.
His exercise.
Yeah.
So, I mean, Mike Mayo can do that too.
Yeah, correct. I guess it's a thing.
He wins competitions.
Yeah. Wall Street,
I wonder if Stephen
powerlifting.
Myron can lift. I mean, the two of them could,
I fear to think about the power of those two men together. Mike, thank you so much. That is Bloomberg's Michael McKee. Away from powerlifting and exercising, let's continue the conversation with Michelle Meyer, Mastercard Economics Institute Chief Economist. Michelle, great to see you this morning. Thanks so much for joining.
Of course.
There does seem to be this disconnect, and it kind of gets to what Matt was saying, this idea that the Fed's best guess of what the Fed funds rate is going to be at the end of the next year is 3.5%. The market is pricing in a 0.5 percentage point lower than that. As we get this ream of Fed speak, is there a real risk that this market needs to come to terms with something different that the Fed itself is pricing in?
I mean, I think the Fed has been very clear that as they look ahead, their forecast is just a forecast that is dependent on how the data evolves. So I think just like market participants, Fed officials are going to calibrate based off of what they see in the real economy. And that's why there's such a big divergence of views, not just between the markets and the Fed necessarily, amongst economists on the street, and also within the Federal Reserve themselves, because there's a lot more uncertainty around the data today than there's been in quite a while.
How does the economy look from your perspective? I think Stephen Myron's his dot for rates was at 225 in 2027. But in his role as the head of the Council of Economic Advisors, he has forecast 4% growth.
Right.
So are we, I mean, how does the economy look to you?
So the question is there, which comes first? And that's always the complication when you're trying to match the dots and make sense of everything. Because in a way, you can say, all right, in order to get 4% growth, you need to take rates down this low. And that's what's consistent within the model versus thinking about growth all else equal would be that strong. And therefore, you don't need that level of interest rates. So I think there's a lot of complications in terms of weaving the narrative as a result of that. But one thing that I do think is very clear is if you look at a variety of different indicators, it is an economy that is continuing to expand. There's been fears for quite a while that the economy was going to turn fast potentially, and it's really not playing out. It's evolving. Tariffs are kicking in slowly, but you're starting to see some of that impact. We're transitioning from this period in the spring of just heightened uncertainty and so many unknowns, particularly for companies, to one where there's a little bit more clarity and they can start planning and thinking about targeted investment. And consumers that are facing, a supportive environment. The labor market is seeing a slowing in job creation, but they're not seeing a reduction in the workforce. You're not seeing an increase in jobless claims. And the wealth effect, the household balance sheet is still very favorable.
I would love to get your take on something Peter Scheer of Academies wrote today, that a K-shaped economy is not how we should be thinking about it. It's a lowercase I economy, where you have a separate dot of wealth that is so high up and so unattainable for the rest of the stick. And that's how we should be thinking about it, that it's even bigger than just a K.
All right, that's creative.
That's why we love Peter Scheer.
Yeah, okay. All right, let me think on that one for a little bit.
Okay. Well, in the meantime, though, Neil Dutta has been writing that consumption doesn't slump ahead of an economic downturn, that you start to get the economic downturn, and that's when you see the slump in consumption. What do you think about that one? Or can some of the consumer data, which you have a wealth of, really be a guide for where the economy goes?
Look, I think it depends on the cycle. It depends on the shock, right? When you think about the financial crisis, which was a household balance sheet recession, it was the consumer that really was the turning point after, of course, you saw the contagion and the problems in the financial system. So the fact that the household balance sheet on aggregate looks healthy in this environment, I think is important in terms of getting a stronger foundation, a little bit more of a buffer out there for the consumer, which is important. But yes, in terms of the leading indicators, historically, you would look at the good side of the economy, the more cyclical side of the economy, manufacturing, housing. Today's environment, a little bit hard to focus on those sectors because there's external factors that are influencing those dynamics. So to me, variety of indicators, look at everything, understand when there's a trend that is consistent across many different indicators. And right now, the trend is still one of further expansion in the economy.
Even if the consumer is set up well, I wonder how much more inflation the U.S. consumer can take. Because, we talk about it on a month-to-month basis, and we would say, like, if it came in at 2%, we'd be like, oh, that's great. But in all reality, like if you're at your kitchen table, that just adds to all the other, I was looking at electricity prices this morning, and we're up 40%, 45% compared to where we were 5 years ago.
Yeah.
So how is the consumer dealing with this continued increase in price?
So there's a few things that I would say in terms of inflation. One is that not all inflation is equal and even. And so when you see inflation in the goods categories, you mentioned utilities, that's important. When you see it in gasoline or in food, when grocery prices were increasing, that really made the headlines and worried consumers. Today, gas prices are low. Food prices are quite contained relative to where we were a few years ago. But certain goods categories, particularly discretionary goods, are starting to see higher prices. So something to monitor and watch. And then it's also inflation relative to purchasing power. So it's inflation of goods and services. How does that compare to wage inflation? How does it compare to asset price inflation? Not just looking at one thing singularly. And wage inflation is still, on balance, running above underlying price inflation. And that's an important metric to follow.
All right, Michelle, great having you in here. Really appreciate your insight. Michelle Meyer of the Mastercard Economics Institute. We want to give you just a little bit of breaking news from the White House on H-1B visas. The White House says that doctors may be exempt from H-1B visa fees. And this is important because we focus so much on the IT staffing aspect of it. Obviously, programmers are so sort of top of mind for us when we talk about H-1B visas, but they're also critical for a lot of hospitals and healthcare service providers.
I think, though, what this does get to is that this policy isn't fully figured out, that the White House saying that they may be exempt, they themselves don't totally know what this policy is going to look like, and it speaks to the confusion that so many of these companies had over the weekend in trying to wrap their hands around
Yeah,
this.
and the uncertainty, and that's what happens when you just come forward with the concept of a plan
Correct.
all the time. Coming up, an old-fashioned binder. Is Citadel Securities' secret playbook for trading hundreds of billions of dollars? And we're talking about a book that weighs 50 pounds. More on that exclusive report next. This is Bloomberg Open Interest. Citadel Securities may run on high-speed trading, but its real engine is a surprisingly old-school book that weighs 50 pounds. It's called a goal book, and each year the Wall Street powerhouse compiles thousands of targets from its nearly 1,800 employees into a single binder, hand-delivered to its CEO. Let's get more details now with Bloomberg finance reporter Catherine Doherty. She wrote the story for us, and it's a story that had me thinking. It had me like up all night, kind of trying to imagine how big is this book? Is it like handwritten notes to Ken? Also, if there are this many goals, how can they possibly like sort through them and determine if they've hit them?
So the point is they're refining their goals. If you have nearly 1,800 employees, that's 3 goals per employee, but they're explicitly laid out in this binder. And I'll also note that it's not just the binder that is helping each employee be accountable for the targets that they're setting at the end and at the beginning of every year. They're doing this electronically as well. So the binder is a physical representation of what the firm is trying to achieve each year, but it's not as if every day is not tracked in such minute details, because that's also kind of the second leg to the way that they are both setting and accomplishing their targets for each year.
I was going to ask, what does this just say about the culture of Citadel itself, that you have month-long debate about what should go in this book? You spend forever trying to whittle it down. You have to have this clean product delivered on the desk of Ken Griffin. Is this emblematic of just the way Citadel does business?
Maniacal detail. This is a company that is trying to grow rapidly as the industry is growing and their competitors are growing at a rapid pace. So they're trying to not only keep up, but they're trying to grow their own business. And to do that, you have to really track each business line individually and then look at it from the big picture, too, from the company as a whole. So the CEO, Peng Zhao, he's very involved in the planning process of this. He's the one that's making up and marking the book himself. He's giving feedback. He's setting lofty goals for the company and each employee. And it's a company-wide process, but it really starts from the top down.
I'm not sure it's clear to everybody how heavy 50 pounds is. Like, if you ever pick up a 45-pound plate at the gym.
Yeah, I don't think I...
It's true. I'm working with 10-pound weights here.
Yeah. Who's moving this book that's 50 pounds?
Yeah, it's again, this book is not widely shown or widely shared across the company.
Is it on a dolly? I mean,
it is only for the top, the folks that really need to have the book are the ones that physically handle it, but otherwise the employees are contributing to the book. They're giving their own targets. They're responsible for stating individually, this is my goal for the year. But this is not a book that gets printed widely.
But also, just who has the time to go through with this whole thing? Is Peng Zhao really going through every single page?
Oh, yes.
How?
Oh, yes.
How does the man have enough time?
Because he is paying attention, just like the founder of this firm, Ken, who pays attention to every detail of all of his businesses. Peng is the same way. He's paying attention to the individuals and the goals that are set each year. And this really started from when he became CEO. And as the company has grown, they haven't lost that attention to detail.
All right, Catherine, such an excellent story.